Welcome back. Futures this morning indicating a decline at the start of trading. Take a look. Dow Industrials down 76. The Nasdaq down 94. Fitch Ratings Agency downgraded the U.S. credit rating this week to AA+. That's down from AAA status, now putting a focus on the nation's $32 trillion debt. Let's talk about the banking sector and the stability. Regional banks in 2023 so far have seen a bit of a shakeup for the industry. Texas Capital is among the few regional banks in the Lone Star state of Texas to thrive in an unstable sector, recently launching its first exchange-traded fund, all the while beating Wall Street expectations with earnings for the second quarter. Let's talk about the growth story of Texas Capital right now with the president and CEO. Rob Holmes is with us. Rob, great to see you.
Hi, Maria.
And congrats on what you've been able to do at Texas Capital after your long career in the banking sector. Tell us about Texas Capital and where growth is right now.
Well, thank you. So Texas Capital Bank has been on a 2.5-year wholesale transformation journey where we've built the first full-service financial services firm headquartered in Texas. And Texas deserves that. As you know, second largest economy in the country, 8th or 9th in the world. And so we felt that there was a mandate for that to occur. We built a wholesale investment bank. We've done our first of everything: co-managed debt deal, equity deal, convert, buy-side advisory, sell-side advisory, securitization. We built a institutional sales and trading floor where we've done about $40 billion of notional trades, riskless, flat, back-to-back trades. The investment bank is profitable today. The trading floor is profitable today after a single year, which is fantastic. We have all the right people in place and talent. We redid the entire treasury platform. So a new payments platform, lockbox, merchant, corporate card, state-of-the-art treasury, which is really important in today's world. And that business is growing 12%. That's a GDP business. And then we reimagined private wealth, and that business is growing in the mid-teens. And we took a highly commoditized mortgage warehouse, which was top 5 in the country, and turned it into an industry vertical. So we do gestation, TBA, whole loan trading. And we said when we started this journey that revenues by fees were going to be 15 to 20% of total revenues by 2025, and we hit that about a year and a half early.
Wow. So you're building a little baby J.P. Morgan here.
Well, it's not a baby.
And you worked at J.P. Morgan.
It's not a baby J.P. Morgan. I've been accused of that, but it's people don't want to delegate decision-making to New York, Charlotte, or San Francisco. There's people in Texas and around the country that want local decision-making and global products delivered locally by experts in the communities in which they live and work.
I want to get your take on plain vanilla banking first, and then I want to go into some of these other areas which have been incredible growth stories. Average loans up, what, 36% in the last quarter? Tell me about lending right now. Also, what about average deposits? What are you expecting there? So
our deposits grew 5% in the second quarter, and we outperformed in the first quarter. High quality deposits. People have a problem that they talk about deposits as if they're all one. Deposits are very different. They have different values because you can invest deposits over different periods of term based on the quality of deposit, if that makes sense. And so our high quality deposits have grown 5%. We went into the first quarter of this year with, if you looked at tangible common equity assets and you looked at Tier 1 capital minus marks our securities booked assets or liquidity, we were 1, 1, and 3 compared to all the GSIBs and banks 200 billion and above, or all Texas public banks. And so that allowed us to maintain high-quality deposits during turbulent times.
Mm-hmm. And what about the other areas? For example, the analysts were really struck by the record quarter you had in fees, like investment banking and trading income. What do you expect? This is a volatile line item, right? So what do you want to say about that in terms of expectations going into the next year?
Well, when we said what the strategy was, people doubted that we could actually do it. And I told the management team, when we do this, they're now going to say that the revenues will be lumpy and they'll have a problem with that. Thank God that's where we are, and they're going to talk about that. But we'll get to a point where we have a core base of fees to where it's highly profitable and good for the shareholders. The great thing about our fee story is that it's very broad. I mean, it's not one product. It's not one deal. It's across the entirety of the platform: Treasury, private wealth, and investment banking.
Let me get your take on the overall industry. A new Reuters analysis finds that many small U.S. banks are not prepared to borrow from the Fed in an emergency. Rob, we've just come off of this unstable period because of Signature and Silicon Valley Bank and the collapses that we saw. How would you assess the banking system today?
Well, first of all, did you know that the average regional bank, which is only a size definition between 10 to 100 billion?
Right.
So I think it's unfair to talk about regional banks because regional banks have different strategies and different liability management strategies. And the banks that were associated with the events of the first quarter that had a hard time were flawed in those two areas. So, but most regional banks, on average, have more capital and more tangible common equity than banks above 100 billion. So I actually think that the regional banking system is strong. It's vital to the economy. It's super important. We are the #1 lender to Texas companies of any bank based in Texas. We were a top 10 syndicate bank for debt for the nation for companies 500 million and below. That's important.
That's a big deal.
There is a big role for regional banks and a big role for the economy and the livelihood of the consumers in these different markets. And
small business are the job creators of the country. But higher interest rates have caught many off guard. Interest rates now at 22-year highs after the Federal Reserve raised rates by a quarter point last week. What's your assessment of the Fed's move of these 11 rate hikes and the impact that we may very well still see because the expectations are coming up in terms of the macro story? I wonder, though, if 11 rate hikes has actually had the impact that it may have.
11 hikes, 17 months, the most and the fastest in my career, I think, ever. And we have not seen the impact. So nobody knows the impact of these rate hikes yet. I think it's too early to call. There's a 20% chance there's another hike in the third quarter, a 40% chance there's another hike in November. But our products, our breadth of our products, our platform, make us financially resilient through any market or rate cycle. So we're front-footed in market and aggressively banking the best clients in our markets. We've
got initial jobless claims hitting the tape right now. The expectation was 277,000. They are coming in at 227,000, in line with estimates. Continued claims at 1.7 million, also in line with expectations. The July jobs report coming out tomorrow. Any thoughts on employment right now in terms of jobs where people say they can't find the people to work in the job today? People have changed their approach to work.
Well,
post-COVID.
Well, we haven't. We've been in office since Memorial Day of 21, 4 months after I started. We were one of the first banks to go back to the office. I think it's really important for companies to actually invest in their employees and have them in office. It's been a huge differentiator for us in talent and the acquisition of talent. In which we couldn't have built this platform and turned this bank around had we not been in office collaborating. The jobs report, look, I think you're going to see up and down, like I said, until the rate hikes take effect. I do think the economy going forward, people are talking about recession, no recession. I think the recession will be by region, it'll be by subsector, and it'll be by segment of the consumer. But the consumer's feeling it. The lower end consumer, this inflation, it's not transitory, and it's an oppressive tax.
And look at these second quarter productivity costs, up 3.7%, actual higher than the estimated 2%. Second quarter labor costs up 1.6% versus 2.6% estimate. So that's any sort of relief on the cost of labor?
None.
So
no relief on the cost of labor. I mean, you don't increase the cost of labor and then take it back. So there is no increase in the cost of labor or no relief on the cost of labor.
What about commercial real estate, Rob? Maybe, Texas Capital doesn't have the impact that others are going to have from this commercial real estate issue that a lot of people still expect to play out.
So commercial real estate. So most banks, the tolerance is about 300% of Tier 1 capital. We're at about 120. It's only 25% of our loan portfolio. It's multifamily, industrial. Office is at the very bottom, only about $600 million. 90% of that's recourse, 85% of it's B or better. We bank the best clients in the real estate sector in our markets. So we're not worried about real estate. It is going to be a drag, though, on lending because a lot of banks now the loan to deposits are high. given what happened in the events of tightening. And when you have a high exposure to commercial real estate, you have to fund those construction loans going forward. And so it will have a negative effect on the flow of capital into the economy. But I think real estate is going to be based on asset class and region.
Yeah, real quick, your stock had a nice move, outperforming after your outperformance in the second quarter. Where does growth come from now?
Well, we just built all these products and services, which is awesome, and we have had a great response by clients in Texas and around the country, because we have national businesses as well. And we have a business banking vertical, middle market vertical, corporate vertical with industry expertise. And now, when you come to our platform, you never have to leave. You never outgrow us, because we have the right expertise and products and services for each of those segments. So we're really excited about just doing more of what we started.
We'll be watching that as you ring the closing bell.
September 28th.
Yeah, okay, we'll be there. Rob, great to see you.
Thank you. Great to see you, too.
Thank you so much.